Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne. We're going to be talking about the continued volatility in silver right around that 30 level, as well as gold, what some of the upside targets could be, and some of the, downside support levels that could offer another good buying position. Now, Jordan, mostly the metals have been kind of flat. Silver a little bit more of a downward bias in the last month, but they're still at these generally high historic levels. So now I know nothing goes straight up forever except if you're Nvidia stock. But again, those bubbles always come to an end at some time. When it comes to silver, though, one thing that's been much more interesting in the silver chart is the daily volatility. We're seeing $1 plus moves on practically a daily basis. Now, it's not like price is going anywhere. It's been mostly flat for the last 2 weeks. But in terms of volatility, you're a technician. Does this volatility do anything to the chart, especially on the short-term charts? And do you think it could bring in some shorter-term traders just because there's more of a percentage move on a day-to-day basis?
Yeah, absolutely, Corey, because when a market, especially a commodity market, makes a major breakout, as gold did and as silver did as well, although not as significant as gold's breakout, when you have that type of a move, a breakout or a breakdown, it's usually accompanied by expanding volatility. So it makes sense that we have this higher volatility, and now gold and silver, they're trying to find an equilibrium. I mean, they're still correcting and consolidating. After yesterday, you could look at the charts and say, wow, this is great. Gold's held 2,300 again. Silver had this great rebound from 29, which is true. And then today we saw it basically given back in both metals. And so this action to me says that both metals are going to require more time before the next move higher. So more correcting and consolidating. And again, with respect to silver, the volatility, it accompanies a breakout. Or I shouldn't say accompanies. It starts to really expand after a market breaks out. So we still have this high volatility in silver because we're only a month or so past that breakout move where silver went, I'm just looking right now, went from the end of March, it went from 24 up to 33 in mid-May. So that's a pretty strong move. And now it's correcting. So day-to-day volatility is still high, but if we're stepping back a little bit, volatility is probably going to decrease. But again, the day-to-day volatility is still high. And yes, after those big breakout moves, you get, rising volume, rising open interest, more traders coming in, as you asked about. And that's just how markets work. But for here and now, I think we're going to need a bit more time to digest the move and find an equilibrium. I could be wrong about that, but that's my sense at this point. And so you get a big breakout, volatility expands, it's rising. Then if you correct and consolidate after that, volatility will come down, but it's still, even though it's coming down, it's still much higher than the levels pre-breakout.
Well, and one thing about this sideways move, too, it has given some of the moving averages time to catch up to price, and silver has bounced right off that 50-day moving average and is still holding slightly above that. Do you carry over that volatility in silver to any of the silver stocks or even the silver equity ETFs? Is there any correlation to what you're seeing on the silver chart to the underlying stock ETFs?
Well, I think with the stocks, it's all related to silver breaking out because if you look at, and I'm just trying to pull up the stocks, but, the stocks were dormant for a while. They weren't really moving that much. Then you get the big breakout in silver and you have these big moves in the stocks. And so their volatility, again, is obviously much higher than it was just a couple months ago, pre-silver breakout. But in commodity markets, Corey, this is rising volatility is a function of bull markets or sharply trending markets. So with respect to the entire silver sector, presuming that we're going to get another leg higher at some point this year, during that leg higher, you would see volatility expanding in both directions and bigger moves in the stocks as well. I mean, they're trending higher and moving up more aggressively, but at the same time, you can get bigger declines when it's correcting within those moves. And after a major breakout and you're in a bull market, that's what happens. Like we're not in a stealth phase like pre-breakout where the market's kind of slowly moving up or grinding higher. That's when volatility doesn't really play a role. But again, your post-breakout and for these metals to trend higher and really accelerate at some point, that will be accompanied by rising volatility. So it definitely feeds the accelerated moves to the upside, but at the same time, you're going to see sharper moves to the downside within those accelerated upside moves.
Yep, fair enough. That all makes sense. One thing that is encouraging, I know you don't look at volume, but boy, that volume in SIL has been very strong over the last couple months. Jordan, on the general stock side of things, I know that percentage-wise, some of these stocks have really moved. And it's not like a bear market where we just have a couple stocks outperforming. But you can also make the argument that these stocks sold off so much that 50%, 100% move still isn't a whole lot when you look back on just a 2 or 3 year chart. But have we been seeing leadership from the stocks over and above simply these nice moves in the precious metals prices?
Well, yes. And as I've discussed in the past, when you get a major breakout, that's when the stocks are really ripe to outperform. And so you look at the moves since March, and the stocks have really been outperforming the metals. And again, I would expect that to continue when we get the next leg higher in gold and silver. So again, we have to go back and think about what the miners are at this point. They're options on gold. Like these are not instruments that you can hold for the long term. Like, yes, in some cases you could hold them for a couple of years, which I like to do. But these are options on gold. And so when gold is in breakout mode and moving, the stocks will lead and they'll run higher as they did in the last couple of months. And I think they're actually holding up better now, Corey, even though the market is correcting. Like I mentioned, the GDX advanced decline line, like that's showing a really strong positive divergence relative to gold. So that's a really good sign. And you think about even the move in the last couple of months, like if you look at breadth indicators, like the percentage of these stocks trading above the 200-day, like I think those all got up to 90%. And we've had this correction for a little while, for a couple months now, and the stocks are not falling apart. So again, they're holding up well. We have the positive divergence in the advanced decline line. So I'm seeing good signs all around.
Okay, fair enough. I know a lot of people kind of complaining about some of the recent weakness in the stocks, or even something like SIL down about 12% in the last month. But you need to consider it was up over 60% since March. So it's not exactly given back all of, or even a majority of those gains. So Jordan, looking ahead then, the next catalyst or driver that moves the metals prices higher, the gold has another breakout and sustains it, and silver has another breakout above, let's say, $32 or $33. In your eyes, does there need to be an event that drives that? Or can it, as it kind of did recently in March, more just be the market's allocating money to it? A lot of people are always looking for this data point or this reason why the metals are going to go higher. Could it just be because it's a bull market and the pops just happen?
Corey, that is an excellent point you're making, an excellent question, I should say, because you never want to get into a situation where you're waiting for something to happen that supposedly will cause the market to break out. Now, one time that worked for me, I think was 2018, 2019, when I was saying for a year or two that the market will move when the Fed cuts rates. And that turned out to be right. However, at the same time, as I've been saying for the last couple of years, well, precious metals, we can't break out or do anything until the stock market falls into a bear market. And look what happened. Look what happened. I mean, it's surprising, but that's something I was wrong about. So, yeah, I mean, you're kind of thinking in the big picture, oh, well, X event needs to happen, and suddenly that's going to bring in a lot more buyers, for this market. Like, that never really works. I mean, you have to read the price action day to day, week to week. And, what we can see here is gold and silver. They had this breakout move. Now they're consolidating. The day-to-day action is telling us that, especially the last couple of days, when really strong moves are getting sold, and also at the same time, when these metals, when they've looked the worst technically in the last week or two, they've rebounded. So that tells you they're consolidating. I'm not saying they can't, break a little bit lower, but that tells us they're still correcting and consolidating. It will continue. And yeah, you're right. I mean, to me, I don't know. Maybe it's going to be rate cuts. Maybe that, when the Fed is looking like they're going to actually cut rates, that could be a bullish catalyst for the sector. I mean, it could be the stock market has a pre-election decline, which a lot of people are predicting. I don't know if that'll be right or not, but I'm just saying that's another potential catalyst because, again, if you get that decline, you're going to get the Fed probably easing. So that's something that I would look to. I think they're kind of related, but to me, that potentially could be the catalyst. But like you said, I mean, it could just be an issue where the markets needs to correct and consolidate here for a little while longer. And at some point, we're in a bull market, so the buyers will probably overwhelm the sellers, and you'll see gold move higher again and silver probably follow.
Yeah, I feel too many people out there, right? Everyone's an economic commentator, and quite frankly, everyone's trying to predict the next big thing when a lot of the time it doesn't work out that way, and you just need to watch the charts and be okay with your position. Sometimes, a lot of the time, the timing doesn't work out as you might think, no matter who you listen to. Jordan, I guess before I get you out of here, when it comes to your portfolio, when we do see some of the runs in these stocks and you have, let's say, 10 or 20 stocks that you really like, different allocations to each stock, do you rotate money within your portfolio when you do see one stock outperform the vast majority of them?
I haven't done that a lot lately, Corey, but I have done it a little bit. I mean, I have mentioned to subscribers, I think I may have sold one or two things that were underperforming, or I trimmed a couple things that are underperforming. You always need to continuously reevaluate what you own and the reason that you bought that position. And if the reason is no longer viable and it's really underperforming, that's a warning sign that you really need to move that capital somewhere else. So, yeah, I think, and also look at your positions against each other. I just off the top of my head, I have a fuzzy memory. There are a couple times where I'm looking at stock A and has 100 million market cap, and stock B has 100 million market cap, and I'm like thinking, like, geez, stock B, this is like a way better value. So you can also value your own positions against each other, or each of them, I should say, because that's going to help you decipher something that you should be adding to, maybe something you should be reducing, or maybe something you should be cutting. Like that's another thing you can do, especially at a time like this. You can also see, because we're in a correction, you can also see, okay, which stocks are holding up better. And especially like maybe the ones that they haven't moved that much yet, they've really underperformed, but suddenly they're kind of showing relative strength. Like those are ones you need to look out for, like those positions, especially if the fundamentals are improving. Like they could potentially really perform in the next leg higher. And at the same time, definitely be careful with things that had a big move, but now they're giving most of it back. That can also be a warning sign.
I think it's just so easy for some people to get stuck in a couple stocks because it is completely outperforming. It's pulling their whole portfolio higher. But just like markets, just like metals, nothing goes up in a straight line. And as long as you have that list of the stocks you like, there is opportunity to reposition capital within those stocks. You're still fully invested, but sometimes, yes, I know you need to let your winners run, but at sometimes when it is 20, 30% of your portfolio, it's also nice to rotate it into some other stocks that you like but haven't run as much. Sometimes that does help. Just continue to at least keep your portfolio in a certain valuation. But hey, everybody manages their portfolio a different way. Either way, at least it's a different playbook now for managing portfolios within especially the precious metals sector. Jordan, thank you as always for your time. I'll post a link to the Daily Gold in the show notes, and we'll chat again in the next couple weeks. Have a great rest of your week and have a great weekend.